Welcome to the Smart Business Revolution.
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 You want a revolution?
You say you want a revolution?
Revolution. The revolution.
It's going on right now.
Welcome to The Revolution, the Smart Business Revolution podcast, where we ask today's most successful entrepreneurs to share the tools and strategies they use to build relationships and connections to grow their revenue. Now, your host for The Revolution, John Corcoran.
All right, welcome everyone. John Corcoran here, the host of this show. Every week I get to talk to smart, interesting, astute CEOs, founders, entrepreneurs of all kinds of companies. A few weeks ago, it was the co-founder of Netflix, YPO, EO, Activation Blizzard, LendingTree, OpenTable. Go check out some of my archives. There's some great stuff back there. I'm also the co-founder of Rise25, where we help connect B2B business owners to their ideal prospects. And this week, I've got Bill Prater. He's raised over $1.3 billion for private businesses of all kinds of shapes and sizes. He was the founder of Weatherly Private Capital. It was an investment banking firm that raised money for companies to finance new businesses, aggressive expansions, management buyouts, M&A, that sort of thing. He grew it up to over 125 people, with offices in New York and Seattle, Washington, and then sold it. Today, he's an author, he's a trainer, he's a coach, he's a mentor, founder of Business Mastery, author of 2 books, Business Mastery, Dominate Your Market, and Dynamic Growth. And of course, this episode is brought to you by Rise25, where we help B2B businesses to get clients, referrals, and strategic partnerships with done-for-you podcasts and content marketing. I am a huge evangelist for the medium of podcasting, which is why, Bill, I'm glad to see that you've joined the ranks of the podcasters recently. How do you like doing it so far?
So far, I love it, John. It's a fantastic thing. I like the fact that you've got a pattern of weekly, and I do exactly the same. I think I might have emulated you.
I'm glad to hear that. I think that more people should emulate that pattern because, you know, if you on a weekly basis are talking to smart people, nothing but good can happen from that. So if you have questions about it, shoot us an email, support@rise25media.com or email or check us out at rise25media.com. Bill, such a pleasure to have you. Now, you know, you started this investment banking firm, and I'm interested to know how you ended up starting that, because that's not typically a starter business. That you know, usually that's not the first thing that people jump into. So I'm wondering, were you the kind of kid who was out on the weekends, in your parents' front lawn, setting up a card table and selling lemonade every weekend? In other words, were you a born entrepreneur from a young kid, or was that something you came to later?
I was a born entrepreneur. I used somehow early on, I fell upon the question about how can I, and usually the how can I would be something like, how can I make more money how can I make some money, whatever. And so out of that came a series of, if you will, entrepreneurship kinds of enterprises inside of companies, where I was able to negotiate, John, a special compensation package for myself. And at the beginning, it was really kind of small, but by the time I was halfway through college, I had enough money to be able to buy a brand new Porsche.
Wow, that's pretty impressive.
Yeah.
Now,
and that's from being a poor farm kid starting out.
Now, so that's what I was going to ask. Actually, did you have much money when you were growing up? Was that what inspired it to begin with? Not having money?
So that's a very insightful question, John. So I ended up being able to go to college because I happened to have an athletic capability, which enticed the college to offer me a scholarship. So I did that until I got hurt, and then that gravy train was over. So I had to figure out how to basically work and go to college simultaneously. And so I joined companies. I joined companies, but right at the beginning, I would ask the boss, how can I really enhance the top line value of your business? And they would say, if you could only do this, that, or the other thing. And
so
I'm
picturing young Bill Prater, 19 years old. What sport did you play?
Football.
So you played football at University of Washington.
Actually, it was you're close because that was after I lost my scholarship at Central Washington University.
Oh, got it. Okay.
I went to University of Washington. Great memory.
Got it. So you get injured, and then you're going to work for these other companies, and you're going to the boss, and you say, "How can I increase your top line revenue?" Quite the precocious kid.
Well, I was. It was. So here's the quick sequence, John, is this. So I'm actually in the summer between those University of Washington and Central. And that summer, I was out helping clear land. And so the guy I was helping had a bulldozer, and I had my 2 feet. And so I was helping, if you will, pick up logs and put them in a pile and all that stuff with my bare hands. And then along came an engineer. He was there on the property doing land surveying. And he walked up to my boss, the bulldozer driver, and said, I got a better job than this for that kid if I can have him. The guy said, sure, go take the kid. So I ended up working in land surveying. So I was out with a machete, chopping lines through the tree and bushes, the shrubs and stuff in Washington State. You know, John, a lot of growth happens in a rain-infested area like Washington. And then along came the end of summer and the start of school. And so the land surveyor guy said, do you know how to draft? You know, to draw lines on paper, drafting? And I said, yeah. I didn't. But I said, and so he said, great. So just after I do this surveying, I got to put it on paper. I said, oh, great. So in I go and start out drafting for a couple dollars an hour, it seemed like. And with him, I ultimately negotiated piecework, John. So we were doing subdivision, envision a plat with a bunch of lots. I figured out that the owner of the company wanted maximum number of lots on a certain piece of ground. And so I would say, how many lots do you think you can get? And he'd say 90. And I'd say, well, can I get paid for every lot I find on this property over 90? And he'd say, sure. So he's selling.
How do you find extra? Isn't there just like a certain amount of land? How do you find extra lots of land on a fixed amount of property?
Well, envision meandering roads and straits and so forth and so on. So you need to have a design that's attractive as opposed to just city blocks.
Got it. Okay.
So the lots are going to be varying sizes and so forth. So I discovered early on that there was an optimal way where I could combine design and economics and end up with 1 or 2 lots more. Well, 1 or 2 lots for him were worth 40 or 50,000. For me, 10% of that was a big number. So that was our deal. And so, and I was extremely good at it. And because I had a good eye for design. I went on later on to work for IBM as a systems engineer. So I understood systems and I understood basic economics. And so
I absolutely see the budding investment banker coming out here just from a young age. So you end up founding an investment banking firm, and you'd worked in some kind of investment management before that, correct?
Right. So my quick sequence was a job with IBM. Well, after this job I described in this engineering company, I got a real job. I had a real job, but I didn't know. So I went to IBM and spent 8 years at IBM and discovered, John, that I was not cut out at all for being involved in corporate America. Although I was on a fast track and I got promoted 3 or 4 times in those 8 years, I really didn't like it at the end of the day. So I got involved with an investment company, ultimately became one of the 8 partners that owned this company. And then I resigned from that, realizing that in addition to not liking working for corporations, I also didn't like partners. And so that's when I founded my investment bank.
Okay. And investment banking doesn't seem like the kind of thing that you can just kind of like teach yourself on the go, on the fly. So what was it like in those early days? How did you put together deals if this wasn't something that you hadn't worked for another investment banking firm previously?
No. But I did understand deals, and so the investment bank that the investment company did put together what are called syndications. So we syndicated investments, and they're deals. Now they were for our own benefit. We weren't doing it for other people. So I understood conceptually deals. I understood investors. I understood where the investors were. I discovered during that time that although there's a lot of glamour and high technology, and there's a few people that end up scoring gigantic home runs, and lots of venture capital firms invest in these companies, wait for the next big winner. The truth is, regular, ordinary B2B companies in all sorts of industries are where the real wealth is. By that, I mean, I don't mean people that are multi-billionaires, but there's thousands and thousands and thousands and thousands of multi-millionaires that own all kinds of ordinary companies. So that's who I met. So I met the investors. So I had those in my mind when I decided to go into the investment banking field, which you introduced eloquently.
And I know that a lot of the work you do now is working with management teams, helping them to coalesce and to grow. You grew your company up to 125 people. Talk to me a little bit about some of the growing pains in putting together management teams underneath you, because that certainly for that size company required, I'm sure, a lot of other managers to help manage everyone.
Correct. However, that was a difficult transition. So I think of businesses growing through 3 phases. Now, a lot of people will say entrepreneurs, small to medium-sized businesses, corporations, enterprises, and that's fine. But that's not the way I saw it then, still see it the following way. You really got solopreneurs, which are people that own a business. They might have 1 or 2 people working for them. I'll call that solopreneurs with staff. The next phase, and this is the phase I was in for years and years and years, was what I call a boss-centric company, which means, John, that the boss calls all the shots, makes all the decisions, hires everybody, fires everybody, has basically a flat organization, even though there may be managers. Then the next phase, and this includes lots of companies at the large end, but very few at the small end, is where you get to the point where it's team-centric. And John, that's why I ended up, out of frustration, selling my investment bank, because I had built a boss-centric company with 125 people driving me crazy because I really didn't understand how to manage them at all. And what I found simultaneously was it was easy for somebody to come to me and ask for 5 or 10 or 20 million, a business owner, because they'd have a business plan and they would describe the project they wanted to invest in, and we would raise the money for them. Then what I discovered is I went from being a money store, if you will, John, to a company babysitter. So I had all these investments, almost $1.5 billion worth of money invested out in these companies. And I'm to a tiny extent exaggerating when I say nobody knew how to run their businesses. They were just like me. They built a business, but they really didn't understand running a business.
So were you just petrified on a day-to-day basis? Afraid? I'm sure some of the businesses
scared to death. So I ended up bumping into a competitor of mine, and she said to me, "Bill, you're emulating the wrong companies." And I said, "What do you mean?" She said, "You're looking at things like best practices and standards and things like that." The word standard refers to average. And she said, so when you are trying to emulate average, you just get better at being average. If you look at a traditional bell curve, the people in the middle of every niche, every industry, they're average companies. And she said, what you need to do is look at the elite players, the top players, the very top players in all these industries, and you'll find that they run their businesses the same way. And it's not the same way as the rest of their industry. It's the same way as all of the top players in niche after niche after niche do. And so I looked into that, and lo and behold, she was right. So I figured out what it was, applied it to my own company, was able to sell it in 1999 after using this system that I created out of cobbled together out of some of this knowledge I've gathered. And then I also, John, used it for my investment clients. So people would come, they'd say, hey, I want 10 million. I'd say, great, Gladys, I'll raise the 10 million as long as you run your business the way I want you to. Okay, because they wanted the money, John. So they're going to say, okay. So what I discovered is, wow, what I did for my investment bank worked for other companies too. So when I sold my company, I just changed hats from being money guy to being business advisor, meddler, Jiminy Cricket, alchemist type of a guy. So I helped people with using a systemized approach to managing their company. And frankly, the results I've had since I founded Business Mastery in 1999 far exceed the results I had as an investment bank, discovering that it isn't the money, it's the management that makes a huge difference.
I want to dive into what the different pieces are of that system that you put in place. But first, I want to ask, so these companies that came to you asking for $10 million to invest, they certainly, I imagine many of them were of substantial size by that point.
Yes, they were.
How are you able to, well, one question would be convince them that, hey, you got to do it this way. And maybe they just sorted themselves out. Like some people said, forget it. It's not worth it. I'm going to go do it my own way and get money from someone else. But also, how were you able to get them to change the way they'd been operating so far?
Well, so two things. Now, money is just another shiny penny. By that, I mean, in addition to money, people, business owners get in their mind, gee, if I only had a better website. Or they get in their mind, gee, if only my management team and I were better on LinkedIn. Or they'll get in their head, gee, if only I understood how to advertise on Facebook. Or holy cow, if we only could get a better CRM system. All of those are shiny pennies. And so majority of business owners think, or if you will, get attracted to some sales pitch about something and they'll buy it. And so larger companies are not exempt from that. They do the same sort of a thing. And money is one of them. So they'll say, and they'll get in their mind, gee, if only I had $10 million, then I would be able to go to market faster, or I'd be able to do X, Y, or Z, or like open up a new branch, or start a new project, or build a new office building. Whatever it was, they weren't thinking strategically. They were thinking tactically. They were trying to select ideas out and go. So I was the store they went to for money, but they would go to other stores for marketing, or another store for sales training, etc. All of those are tactical things. So in the process of them asking my firm and I to raise money for them, they would explain their business. And then I got pretty good at saying, well, it seems to me that what you've described is you don't really have this as strong of a management team as you'd like to have, right, George? Yeah, I'm kind of disappointed. So I was back to, if you were to think with a clear slate, I said I would use the same old question I used back when I was 19 years old, and that is, how can you imagine changing things? And they would immediately, John, jump off money into something else. And usually it was develop a clearer strategy, be able to finally reach my vision, to have my team buy into what I want to do, to be able to have people accountable, to have people deliver on what they promise. They would do all that verbalization, and I'd say, tell you what, I have the same problem in my firm. And over the last several years, I've been solving that. So here's my proposal. We'll raise the money if you allow us also to be your consulting firm and help you reorganize your company. They'd all say yes, because I had huge leverage, John. It wasn't really convincing them. They knew that I was going to say no if they didn't improve their business. That was a long answer, but I think
did you have adequate buy-in then? You had the money leverage over them, but did you get the psychic buy-in also? Or did sometimes these companies say, yes, because we want the money, but you didn't get them to really fully commit?
All right, so that's a great question. So the system that I developed then and still use today is very fast, very fast. By fast, I mean that the economic result is fast. And so somebody, when they invest money, they get a return back in 30, 45 days. When you're building a new division or starting a new product line, the investment cycle is long. And so they would actually see the results from changing the way they run their company. They'd see that faster than they would see the return on their investment, if that makes sense.
Yeah. Mm-hmm.
It's quicker. So even today, John, I basically say to people, hey, look, don't trust me. Just agree to do what I tell you to do. And if you don't like it, don't pay me. So I've done that forever, since 99. I've never had anybody not say, you're right. This is it. I totally understand it. I get it. Here's your money. So so that's kind of that's beyond riskless. A lot of people will say, try this and I'll give you your money back in 30 days if it doesn't work. Okay, good. That's fine. I don't do that. I just say to people, I'm going to give it to you for free, and then pay me after it works.
Wow. Yeah, that's pretty hard to turn that one down.
It is.
I want to ask you about, I know you there was a construction firm you worked with. Yeah. You had some pretty phenomenal results for. They were around 10 million in revenue, scaled it up to 250 million working with you. Talk to me about some of the things you put in place for that client in particular.
All right. So this is not an unusual story. It's just one that I happened to come to mind when you asked me if I had a couple examples, because I've got hundreds of stories like this. But basically, what happens, John, is companies, sometimes they fail, of course, most fail, but the ones that don't fail, sometimes the industry sort of pushes them up or pulls them down. For example, we had this economic crisis caused by the pandemic over the last year or so. A lot of companies went, woe is me, and they're gone. Other companies flourished and prospered. So, but a lot of companies get to the point where everything they're tried doesn't seem to work. I mean, so the needle doesn't move. And a lot of times business owners will look at top line revenue or cash flow or profits, and they'll see it sort of flatlined. Now, flatlining in this company's case was 10 million. Nothing wrong with 10 million until you hear that their profits were about 300,000 a year. So imagine 10 million of work, 300 of profit. Wow, that's a lot of work for that much return. Yeah. And it was 4 people that owned this thing. So you divide 300,000 by 4, then it didn't feel too good.
Wow.
Plus, they're up in Washington State, and so all winter long they're red ink, meaning losing money. Then they make it all in the summer, and then along come winter again, and they had this huge, red and black cycle, and eked out sometimes a profitable deal. So what I learned back in the late 90s, and I've modified it and and tweaked it and so forth and so on. But the foundational principles are the same. And so these three foundational principles are what I put in place at this construction company. I'll give you what happened in a few seconds. And they are, number one, having a mindset. And you mentioned a couple of books I wrote. So one of them is having a mindset of mastery. Now, by mastery, I mean literally being at the top. So first, I need to have people think like they're number one, believe in their mind that they can get there. Now, number one doesn't mean dominating the world like Richard Branson. It could, but you don't have to do that. You can master 3 square blocks in your hometown. You can have a beauty salon that handles a neighborhood, but there's no reason that you shouldn't be the best beauty salon in that area. So part one is having a mindset of mastery, and that includes putting together a game plan and strategy and things like that. But fundamentally, mindset of mastery. Number two, and all the leaders of all industries do this, is number two, they have a management system. So a lot of people have an accounts receivable system or a billing system or an advertising system, but few have a management system. So that's the second element, is a management system.
And that would that be like, I don't know if you're familiar with Gino Wickman's EOS from his book Traction. Is that like an operating system?
I think I'm familiar with virtually all of those.
Okay. There are different
It's a lot
ones.
simpler. The system that I invented, it's simpler. The reason that I wanted a simpler system is that virtually all of my companies are what I'll call not exactly homegrown, but they're not a group of people that went to Wharton and Harvard and Stanford. They're people that began in the trenches and got promoted a few times, and now they're on the senior team. But they never ever studied anything like management. So I needed something simple. So it's very
kind of like your
simple.
background, starting from the farm.
Yeah, it's the same background I had. You know, it's literally the same. And the third one is, and I mentioned this earlier when I talked about being team centric, and that is developing a high performance team. So a mindset of mastery, a system of management, and third is developing high performance team. So with the construction company, the first thing the first kind of tells were the way that John was his name, described his company, and he described it in a very limiting way. He gave me literally the county of Washington State that he operated in, the county, shrunk down. He gave me the kind of work the size of the work he did. Biggest job was $1 million, shrunk down. And so what I got John to realize is that if he says things like that, somebody in a different county isn't going to do business with him. Somebody that has a job bigger than $1 million won't do business with him. So he's trapped himself by his own description of his business. So I got John to think more about his capabilities as opposed to his geography and his previous biggest job. So within 90 days after I started with him, he was a $10 million company. I helped him land a $40 million job.
Wow.
So because he had a skill within the company, a skill which appealed to this utilities organization, that they wanted this skill. So they landed this big job. The job is 4 times bigger than their annual sales.
Now that would break some businesses.
Oh, good point. Good point. So now we're into the management system. So what I teach people, John, is to focus on the vital few and ignore the trivial many. Because if you allow your brain to get consumed with all of the details involved in a $40 million construction job, you'll be paralyzed. And so we got to focus on the very fewest things we can do to be most effective. I don't disbelieve efficiency, but I'll pick effectiveness first. And then third, I got John to understand the power of leveraging teams, both within inside of his company and externally. So that combination of getting John thinking right, running his system from a systemized approach, AKA also known as accountability, and then third, leveraging high performance teams. And frankly, we were able to take himself and his three partners, and all of them were able to grow with me and my system and get to the end. Sometimes it doesn't work. Sometimes some of the players change, but in their case, the four key owners stick around.
What about the bottom line? How did you prevent them from bringing in that $40 million project, but then eking out, a $400,000 or less profit margin, making the same mistakes, in other words, but just at a larger scale?
Yeah, great. Yeah, excellent question. So I said to John one day, John, why aren't you guys doing work in the winter? Well, because it's muddy. Yeah, of course it's muddy. It's raining like hell. And so you can't dig ditches and things like that in the mud. Can't do it. I said, I wonder if there's some place in the United States of America where in the winter it isn't muddy. He said, well, Arizona. I said, well, John, why don't you go to Arizona and then and build a branch or a division or something down in the Southwest? And so that's what he did. So the fundamental, he went from one county in one state to national, and then he was the southern part of Canada as well. So it's a combination of thinking and understanding things. Kind of a footnote, I had a customer equipment dealer up in North Dakota, and he was complaining about not being able to find diesel mechanics. I said, really? Can't find diesel mechanics? Where do you look? All over the state. I said, really? No kidding. And it happened to be that there, at that particular time, there was in Louisiana, John, remember the dike breaking and the whole place getting flooded? I said, John, do you think there's any diesel mechanics living in Louisiana? Probably. I said, how many of them do you think are right now looking for a job? Probably a lot of them. I said, put an ad in the various newspapers down in Louisiana. And he said, well, why would they want to move into North Dakota? And I said, really? So John, so if somebody working for you quits work at 3:30 in the afternoon, they wanted to go hunting, how long would it take them to go out and pheasant hunt? Oh God, it could take them 10, 12 minutes. I said, yeah, it's pretty attractive, right? How about if they want to go fly fishing? How much time would that take? 10 or 12 minutes. Everything's 10 or 12 minutes. And then I said, so, but I'm kind of getting sidetracked. Or not.
The point is, he didn't see the assets. He didn't see the asset. He didn't see the value. No. He wasn't selling the value of. Yeah. Okay. Got it.
Yeah. It went on and on too. He could. In those days, it's different now. But in those days, you could buy a 4-bedroom brick house in Fargo, North Dakota, for 10% of what you'd buy the same house for in San Jose, California.
Yeah. That's great. You had another. There was a woman that you coached and trained and helped her up also. Tell us that story. She was making under 100,000, quit her corporate job, and you had some pretty phenomenal results for her as well.
Yeah. So I mentioned earlier that when I created the system of management, I wanted it to be simple and easy and applicable to all levels. So in a larger company, the system called Business Mastery System, I designed it to operate at the senior leadership level, at all the departmental levels, and all the way down to the front line. By front line, I mean foreman and her crew on the job. So a solopreneur can easily use the exact same systems that I'm talking about. And so you're probably asking me about Sarah, is her name? And Sarah is one of many, 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 many illustrations like this. Left corporate America, started up her little company. She was great at helping women transition from corporate America into owning a franchise or starting a little business and so forth. And so she had, after 3 years, not even gotten her income up to the level of her last job. So she left her job, lost money 3 years in a row. Finally, she bumps into me. And I said, hey, Sarah, you're doing too much stuff. I want you to come up with one goal. She said, one? I said, one goal. That's it. Is that my limit? One. She says, okay, I want to triple my monthly income. And I said, what time frame? She says, 1 year. I said, okay, good. We'll use the rule of threes. She said, what's the rule of threes? I said, well, we're going to pick three things. We're going to go through three things, 3% a month. At the end of that time, you're going to have 300% monthly increase in your revenue. She says, I think I can do 3. And I said, I think so too. So basically, what we did is came up with her goal. She wanted to increase her monthly revenue 300% at the end of in 12 months. So that's, if you will, I let people go up to 5 goals, by the way, but in her case, 1. And so we got 1 goal. Then we need what are called vital drivers. I use the word vital not casually. A lot of people use words like important. Heck with important. Out with important. All we want to deal with is vital, means essential. It isn't optional, it's vital, meaning that everything else you do is of lesser importance than this. So I get everybody in the company to think of, and I got Sarah to believe this is the single thing I want you to think about because it's vital. Now we got a vital driver or a goal, vital goal. We want 3 vital drivers. In her case, we got those 3, which is increasing the number of clients. Number 2, increasing the average amount of the transaction. And number 3 was increasing the length of time that she had a coaching arrangement with these people. Increased each of those 3%. You do that math. Anybody can do that math. Take anything and 3% a month times 3, you get to tripling your result in 12 months. And so we did that. And she did 3 years in a row. And last year she got her revenue to over $1 million. All of it, John, was monthly recurring revenue, meaning that it was a membership site. Basically, now she'd gone from coaching to running a membership site. And she sold that business for a little over $3 million last year. Actually, the first of this year.
Wow. Amazing story. We're almost out of time, Bill. Before I let you go, I want to ask you my gratitude question. So I'm a big fan of gratitude, particularly, if you look at your peers and contemporaries, however you want to define that, maybe your referral partners, who do you respect? Who do you admire is out there today?
Well, there's quite a few, but one comes to mind immediately. And actually, I am grateful to IBM for a variety of things, and one of which was that my boss's boss, so quite a bit above me, and I got my first promotion, and I got a phone call from this guy. His name was John Akers, and so John called me on the phone, and he said, "Hey, Bill, congratulations on your promotion." And I'm going, "Wow, this is cool. I'm talking to the regional manager. This is cool." And he said to me, "Bill, if I were you, when you get promoted down to San Jose, I recommend that you buy a house in Palo Alto." I said, "Oh, okay, fine. Thank you." Click, go. Interesting. Regional manager kills me and tells me where to buy a house. In any event, the net of it was, he ended up being a mentor. He went on to be the CEO of IBM. He was a mentor of mine. And sometimes what I learned, one, I'm extremely grateful still after all this time, because John was very strategic. And so the reason that he wanted me to move to Palo Alto was right in the epicenter of all sorts of IBM installations. Think of I don't know if you know the geography. I know you know the geography, John, but some people don't. So San Jose, Palo Alto's halfway down the peninsula. At the bottom of San Jose, at the top is San Francisco. Across the bay is Oakland. There's dozens of IBM locations in that environment, number one. Number two, IBM has a policy that that they will move you. If you get a promotion, they'll move you. However, only once every 2 years. So if you are living in a place where they can promote you without moving you, they can do it quicker than every 2 years. And so that was he did not say to me, the reason is the following. I had to sit and think about it and ask a few people what he was talking about. But I guess the lesson there, John, was Always be asking, how can I? Out of that will come people that are extremely willing to help you. Many of them will give you fantastic help for no compensation whatsoever, including this guy. And I've had that pattern continue over the years where I've simply said to people out of the blue, how can I? And then I just fill in whatever I want to do. How can I get the number one company in New York City to have a meeting with me? Somebody will tell you how.
That's great. We're out of time. Bill, this has been great. Business Mastery, Dominate Your Market, and Dynamic Growth are the name of the two books. Where else can people go to learn more about you and connect with you?
Well, the simplest thing they can do actually is just go to getbillsbook.com, and that'll give them a free copy of my latest book, which is Dynamic Growth.
Excellent. All right, Bill. Thanks so much.
You're welcome. Thanks, John.
Thank you for listening to the Smart Business Revolution podcast with John Corcoran. Find out more at smartbusinessrevolution.com. And while you're there, sign up for our email list and join the revolution.
Revolution.
And be listening for the next episode of the Smart Business Revolution podcast.